So,
Perfect. All right. I'm John Denza. I'm the Chief Commercial Officer for Eris-X. Give a little bit about my background. I've been in the traditional financial space for about 20 years now, having worked at multiple exchanges. Those include Island ECN, NASDAQ, Instinet, BATS, SIBO, and then about 4 years ago, I joined Eris-X, which is now going to become SIBO Digital. Personally, I got involved in crypto about 7 years ago. Funny as it sounds, it was through my wife who actually started doing some research after she left Bank of America. And having spent so much time in traditional finance, I saw a lot of the parallels to, when I was doing sales for options and equities from a market structure standpoint, routing, and so forth. So I joined Eris-X, and it's been a great ride since with our recent acquisition by SIBO. So let's dig right into the slides. All right, so what is Bitcoin? So we're going to cover topics of what is blockchain, crypto, distributed ledger technology, which is blockchain, smart contracts. And then after we do an overview of the industry, we're going to, the second part of the presentation is going to talk about Eris-X and how you access orders, our regulatory status, and the likes. So let's dig in. So what is Bitcoin? It's a form of payment. So let's use it as an example. I like to use Starbucks. So you go to the counter, you order a latte, a medium latte, and the lady says $3.69, and you decide to reach into your pocket and grab a gold coin. It's a form of payment. The lady's going to look at you like you have three heads. She's not going to know how to break the coin up into divisible pieces. She's not going to be able to give you change, and she's not going to be able to sell you the latte unless she wants to charge you a couple thousand for that latte. So that's where Bitcoin comes in. So Bitcoin is similar in regards to, let's say, like having a bank account. So the same thing as having a bank account. You can have a wallet holding your crypto. And the beauty of Bitcoin is a lot of people get this misnomer. They're like, oh, crypto's now unfortunately trading at 21,000, 20,000. Do I have to buy a whole Bitcoin? No, the way that they created the product, which is really novel and smart, was they made it so that the product goes out 8 decimal places. So as there's an appreciation in value over time, you can actually break it up into smaller increments, like in this example where you're buying the latte for $3.69. I'm John Denza. I'm the Chief Commercial Officer for Eris-X. I lead the sales and BD efforts for Eris-X. Prior to joining Eris-X, my career was spent in traditional finance, having worked at firms such as Island ECN, BATS, CBOE, NASDAQ, and Instinet. Always in a sales capacity, either being in options or equities. And then about 4 years ago, I actually came across an opportunity to work at Eris-X, which was launching a crypto exchange. And it's funny, I got involved in crypto through my wife, who actually was the one who, she had left Bank of America, was exploring some different opportunities and so forth, and then brought up crypto. And I kind of fell down the rabbit hole, to be honest with you, with crypto. So to fast forward here, jump ahead, what is Bitcoin? So we're going to cover today what is cryptocurrencies, blockchain, smart contracts will be the first part of this discussion. Second half will be an overview of Eris-X from a regulatory standpoint and how to access the market. So let's talk about Bitcoin first. What is Bitcoin? It's a form of payment. So I love to use this as an example. An analogy is, so let's say, most of you have actually bought, a latte or a coffee from Starbucks or Dunkin' Donuts, wherever it may be. So Bitcoin is a form of payment. So if you went to the counter, you order a latte, it's $3.69. You reach into your pocket, you grab a gold coin, and you place it on the counter. The barista at Starbucks is going to look at you crazy, because how is she going to make change of a gold coin? It's impossible. So you're definitely not going to want to spend $2,000 on that latte. So this is where you could use dollars, or you could even use crypto. You use Bitcoin because it's a form of payment. So the beauty of crypto and Bitcoin, which I think is lost on a lot of investors, is they see the price being at 21,000 and they wonder, wow, that's a huge price to buy a Bitcoin. But it really isn't. The way that the original white paper is for Bitcoin is that it actually goes out 8 decimal places. So Satoshi, the founder of Bitcoin, had that concept for the growth of this asset class. You need to make sure that if retail people are going to use it to buy and sell goods, it needs to be divisible. So if it grows in value, you still need to be able to go out multiple places to be able to support purchases such as a latte. So it takes me to the next slide, where I just want to illustrate the fact that we're talking about a gold coin or a gold bar having a store of value. Well, it works the same too with Bitcoin. So we all have bank accounts, and we can deduct funds from a bank account. You might have an app on your phone for Dunkin' Donuts. You flash that app, and it deducts those funds directly from the account. Well, the same is actually can happen with crypto, with Bitcoin, where if you went to the counter and you bought that latte, you could flash that barcode and it would automatically deduct those funds from your account. So you have an account with a bank, but you would have a wallet holding your coin for Bitcoin. It's kind of the difference, but they're very similar. The next piece that I wanted to touch base on was blockchain. It's not this guy with the house with made out of Legos. It's actually distributed ledger technology. It sounds like a big word, but what it really is, in its simplest terms, is if you had an Excel spreadsheet, and if Lonnie's working on the Excel spreadsheet, I'm working on the Excel spreadsheet, there's some employees at iPlan that are working on it. Everybody can see the updates we're making to that spreadsheet in real time. But the real important piece to note here is that it's immutable. And what does that mean? That means if I make an update to that spreadsheet and I lock that piece of history in time, nobody can come back and rewrite my history. So it's there on the blockchain for perpetuity. So there's a difference in the space between what's a store of value like Bitcoin and that of Ethereum, which is a smart contract. Smart contracts are really the ability to lock in a message and what you're trying to do and giving it a command, almost like an if then. If I do this, then this will happen. So I'm going to provide an example on my next slide. So it's late at night, you're in a hotel, you're hungry, you decide to go down the hallway and you want to buy a Kit Kat bar. Well, the Kit Kat bar on the machine says that you have to hit A3 and it'll cost $1 to buy that Kit Kat bar. You put in 75 cents, you hit A3, nothing happens, right? Then you go back and you put in another quarter and now you have $1 and there you hit A3, the Kit Kat bar drops to the bottom of the machine. So basically it goes back to that reference of what I was saying. If I put $1 in the machine, if I hit A3, then the Kit Kat bar will fall down. That's what a smart contract is in its simplest terms, an if-then statement where you're giving instructions with an expectation in the end. Check here. So a lot of the audience, most of the participants on this call probably heard of terms like decentralized finance and centralized finance. Well, really what it is if you're thinking of, let's say, like, for example, NASDAQ or the New York Stock Exchange, those are actually their matching engines where they set up buyers and sellers are set up in a data center, bare metal machine. It's a centralized location for you to execute those orders. DeFi is a little bit different. It's actually a peer-to-peer network. So for example, if I wanted to, with a family member, wanted to enter into some sort of a loan, instead of having to go to the bank to set up that loan, I could set up this peer-to-peer with my family member to loan money and set the instructions on what the rate would be and so forth. But hopefully I'm giving them the money for free and not charging for it. Let's jump ahead here. Let's see 1 second. All right. Now, one thing I wanted to touch on here when I'm talking about smart contracts, I just wanted to take it a step further just so that the audience can understand the value and the proposition for a smart contract. If you take it to a step beyond, think about it. Most of the audience here has probably acquired a mortgage at some point. When you're dealing with a bank, it can be quite cumbersome. You're negotiating the rate. You're coming up with all kinds of paperwork. You're trying to find, you're doing a title search. You're basically at the mercy of the bank and their terms and how fast they move and so forth. What if you could actually package the smart contract into the mortgage into a smart contract, where I almost eliminate the bank from the process. In doing so, I set up the contract where I want to purchase this home for X dollars at this rate for this term. I want my title search and all the other ancillary pieces to be done within the contract. Well, now you're removing the middleman. You're removing the friction of having to deal with the bank and the additional fees by including those middlemen. And by reducing that friction, you're also reducing the potential for failure because you're putting it in a smart contract and there's not that human intervention with what could possibly happen with your loan. Now, we touched on it before, but with crypto, you're actually putting your coin, if you're going to store it like we do at Eris-X, in custody. So that is a way that you can store your crypto safely. So we work with a third-party provider called BitGo. When you put it into custody, one of the pieces of custody is going to be cold storage. Some people use the term air-gapped. Those are fancy terms for just saying you're going to actually put your crypto, let's say, in a device that's going to be like even a thumb drive that's going to come completely off the internet. So it's not touching anything that could cause somebody to potentially hack it because it's completely offline. What some of these custodians will do, even, and to take it a step further, is they'll actually have a safety deposit box at a bank where they'll store it in the safety deposit box. And then when they need to withdraw the funds, they might go to the bank, bring their laptop, plug that into their laptop, and then start to release the funds at that point, or release the coin. So this is just an example of what we do for our custody. So we work with, I mentioned to you before, we work with BitGo. We also, with BitGo, there is a insurance policy in place. If there's ever a hack, a nefarious actor comes in and causes for there to be a loss of funds, they have a $100 million insurance policy. We also have an insurance policy as well in place. And also we've taken it a step further and gone out and acquired a SOC 2 Type 2 agreement. What that basically means is that we went through an extensive audit where we prepared for about 6 months, and then the review was maybe over a period of 3 to 4 months. And they're really, when they're doing that review, that audit, they're looking to see how we protect customer assets. And we successfully completed that SOC 2 Type 2. This further illustrates the point I was making before about custody. So what happens when you actually custody coin with Eris-X? If you're a clearing member, you have a wallet here. Those funds, when you deposit, come into what's called a warm wallet, which is the step just before going into cold. So you're first moving into warm, you go to cold, then there's a request to actually remove the funds out of cold. Then they immediately go into a hot wallet, at which point they can be withdrawn and they could be accessible on the market. A lot of you have heard of the term miners in the industry. It's not these gentlemen working in a cave somewhere trying to find coal or gold. What the role of the miner is it has 2 functions. Those 2 functions include, 1, trying to solve a very complex equation to unlock additional Bitcoin. So throughout the life cycle of Bitcoin, there will only be 21 million Bitcoin ever mined. They'll only be in existence. It's not like the treasury where you could say, I want to keep printing cash and flooding the market with cash. No, there's a limited supply of what could be available. So those miners do one thing, which is solve that equation and then hopefully unlock a new block, which could release them new Bitcoin. So over the life of Bitcoin, what happens is there's halving events. So the last halving event was roughly about 2 years ago, where those miners that solved those equations were rewarded with 12 Bitcoin. 2 years ago, it dropped down to 6 Bitcoin. The thought being that as the price of Bitcoin increases, there'll be less made available with these halving events to the miners. And what happens is it's kind of like a slope curve. So at the end, this halving events will go on up until the year 2140, because they're going to keep halving. The next one will be 3 Bitcoin. Then after that, it'll be 1.5 Bitcoin until you get down to 0. Now, the other role that the miner has is it actually approves transactions. So if I wanted to move Bitcoin from my wallet to that Starbucks that I talked about earlier, it has to go out onto the blockchain. Once it goes out onto the blockchain, it's the role of the miner to validate that transaction. So think about it. It's almost like a toll booth. You're coming out of your wallet, going through a toll booth, you're going on this superhighway, and then you're paying the toll to go into the other wallet. That's what the miner does. It validates transactions and solves the next blocks to try to accomplish or achieve that reward of additional Bitcoin. Now, a lot of you have probably also heard of the term, loosely heard of the term non-fungible tokens, NFTs. Some people talked about that Bored Ape, the crazy ape pictures that you see online and so forth. But really, an NFT can be just about anything. You could take the Mona Lisa and turn it into a token to tokenize it. And what that basically means is I can take it, tokenize it, and then maybe break it up into other parts where you can then have maybe 100 people each buy a percentage, a small token that will collectively add up to the ownership of the Mona Lisa. And when you do that, you create a market by, buyers and sellers willing to buy and sell pieces of that token. Same as with collectibles, baseball cards, and even if you're looking to purchase a building, it's actually happened before where you can make a building into a token and people can buy pieces of that token and invest. This kind of all segues into the new version of Ethereum, which will eventually be Web 3.0. Now, the hindrance, or the limitation, I should say, within the equity markets with IPOs is you can only trade those products from 9:30 to 4 Monday through Friday. So there's a limitation. So let's say there's a global Mac event that happens on Friday evening that might cause the markets to either run up or run down, but you're trapped. You basically can't access the markets until Monday morning at 9:30. Well, the benefit of tokenizing a security would be able to trade that product 24/7, because the markets for crypto never really sleep. So you can, if there's an event, you can easily trade in and out of that event if it was eventually tokenized, which that is where the future of the industry is eventually going to be. I think we're a few years out from that happening, but being able to take it from, Monday through Friday to 24/7. And also even too, if you trade equities, you're on a T+2 settlement cycle. Now, if you have a token, it's immediate. You want to move the token from point A to point B, from one wallet to the other, it happens in seconds. Just a brief overview of our coin listing policy that we have in place, talking about the different pieces that we might look at and consider when we're adding new coins. We want to make sure it's not a security. It's what's called the Howey test. We're going to look at the concentration of control, hash rate, and a couple other items, including making sure that the state regulator, which is the NYDFS review under the additional considerations, is allowing that to be an approved token to be traded. There's another example just of the coins that we trade, which are Bitcoin, Ethereum, Bitcoin Cash, Litecoin, and USDC. One thing to note is when Eris-X was being acquired by SIBO, that announcement was sent out in October of last year. We had a pipeline of new alts coins that we were planning to list, but because of the acquisition and concerns that there might be a delay, if the regulator had some concerns, they told us to pause and halt on adding new coins. They didn't want the SEC to get involved and start questioning some of the decisions we were making. So that takes us up to May 1st, at which point the acquisition was completed with SIBO. And now we're really starting to ramp up adding the new coins, which would be available to your customers. So Aave and Link are two coins that we're planning to list this month. And then we've got a pipeline of about 20 to 30 that will be added over a period of time, I would say the next year. So we're going to slowly every month add 2 or 3 into the pipeline. And at what point we'll be adding about 30 of them within the year. Some of you might have heard of stable coins, and really what a stable coin does is it's pegged to the dollar. So you might have heard of Circles, USDC, Gemini Dollar, Tether. All of them are backed by, or supposed to be backed by, reserves of the dollar. So $1 is equal to 1 stable coin. The benefit of using stable coins, think about it. It's the movement of funds or fiat into the system. If you're moving money internationally through the SWIFT system, they can actually charge a very large fee, the banks, up to 1% of the transaction cost. And it could take 7 to 10 business days, depending on the jurisdiction that you're sending these funds. It's obviously it's very outdated and needs a full revamp. And it's another reason why the banks collect these tremendous fees on the movement of fiat. Well, stablecoin removes that friction, because you can actually bundle that money into the stablecoin and within a click move it from one wallet to another if you have the address, and it could be done in seconds. There's even an example where, even though this is technically not a stablecoin, but it was the original kind of premise of the stablecoin, where Ripple XRP, which is under review by the SEC, where somebody moved 50 million in Ripple from one wallet to the other, and it was done for less than $1 and in 30 to 45 seconds. Just think about how it's somewhat of a threat to the banking system, because you're quickly moving fiat from one party to the other versus this archaic system that's in place with SWIFT. Now, some people say, they think of Silk Road and the bad actors in the space and how they're able to move crypto and illegally and so forth. But really, that's a misnomer, to be honest with you, because think about it. If you wanted to wash money, dollars, it's much harder to track that than with Bitcoin or other cryptocurrencies, because every time you move it from one wallet to the other, as I mentioned, it goes out onto the blockchain and basically creates a digital footprint. So for example, you probably remember like a year ago, a year and a half ago, I should say, in the Southeast, there was that hack of the pipeline system, the ability to move gas and fuel between all the different, gas stations in the Southeast. Well, that hacker asked for Bitcoin as a ransom. And they were able, when they moved the Bitcoin to that person, they were able to track back to who that nefarious actor was and actually capture him. So this just goes to show you that it's a much easier and cleaner process because you're putting things out on the blockchain. It's immutable and you could trace it back to who the intended party is. Now, I love to talk about this one. I'm a little bit older, so some of you in the audience might remember We Are the World. But it really, I love to touch on mass adoption. So really thinking about the space in its regard is, we think of, let's say, for example, parties like Fidelity that are out there trying to promote new ETFs for crypto. Right now, we've got 2 or 3 ETFs, but they're based on the futures price, not the underlying. But when you have a brand like Fidelity saying that they're getting involved in the space, it carries weight. You also you've heard announcements recently about how Goldman and Morgan Stanley are all building out trading desks to support cryptocurrency trading for the high net worth clients and institutions. But when you even think about it too, is Bank of New York is the largest custodian in the world with 43 to 45 trillion, that's with a T, in assets under management that they store for their customers. And just last year that they said they made an announcement that they're investing in a company to support custody for the asset. And then also, when you think about it, BNY does not want to make the leap into cryptocurrencies. What's really happening is they're being forced to by their customers who want access to the asset class. They're saying, if we're going to do our business with you, you need to round out your product suite to be able to support that. So BNY is getting involved in the space, but a real barometer, I think, and a true test is what happened with PayPal. Prior to PayPal announcing that they were going to get involved in crypto, there were only 100 million digital wallets ever created. When the announcement hit about PayPal, 350 million people overnight had access to crypto, which is really amazing. You 3.5x the environment or the participants that had access. And if you also bake in or factor in Venmo, that's another 70 million people that automatically had access to crypto. So that accessibility is, in my opinion, is only going to eventually drive the price up with all this interest. And lastly, if you think about it, with there only being 21 million ever being mined and being available, you can actually think about it in this regard. We should, most of your customers are going to want portfolio diversification in their IRA. Maybe they have real estate, they have precious metals, they have equities and so forth. Well, if everybody considered putting a little bit of crypto into their investments, let's say 2%, it's really going to drive the price of crypto up. Because think about it, like I said before, 21 million will ever be mined. There's a possibility that maybe 25 to 30% of that 21 million will be lost in the future. So there's actually a smaller amount even available. And there's been reports like from the research team at Citi that have said that the value of Bitcoin could eventually hit anywhere from 300,000 to 500,000 per coin because of the limited supply. Next slide is just want to leave my information here for the group. As I mentioned earlier, I'm the Chief Commercial Officer for Eris-X, and I welcome any questions, especially market structure, exchange, on the topics of crypto and blockchain. Please don't hesitate to reach out. Once again, I am John Denza, Chief Commercial Officer for Eris-X. I lead the sales and business development efforts for the exchange. The next section here, we're going to just walk through an overview of Eris-X, our regulatory structure, and how you can access the market. So first tab I just want to touch on is just about where the growth is in the industry, and talks about here. I'm going to jump ahead one more. Let's start here. I want to start on the history, but where the growth of the industry is really how we create new products. So when you create a spot product, what happens with the maturity of that product is you create derivative products, let's say futures, options on that product. And also what happens too over time, personally, I was investing in cryptocurrencies 6-7 years ago, and I even shake my head now to think of some of the things I was doing from a KYC AML standpoint, where I was setting up with these foreign exchanges, trying to access the market and buy crypto. Did I really give it some good thought that, God forbid, this exchange disappeared over time? What's going to happen to my coin? No, I look back on that and I'm a little nervous, and I consider myself to be fortunate. And that's where the maturity of the market is, and that's where regulation comes into play. And I'm going to touch on that in just a little bit. But this slide, I wanted to touch on how we got from where we were to present day acquisition by Eris-X. So initially, 7-8 years ago, we came up with an interest rate swap futures product, and that company was Eris-Exchange. When they did that, the original investors had pursued a DCM, which allowed them from the CFTC to operate a futures exchange with that product. The way futures trade is you have to trade them on a DCM, but you have to clear them with a DCO, which is a derivative clearing organization. In this scenario, it was actually the CME. So participants are trading on Eris-X, buying and selling futures, and then being cleared at the CME. Fast forward, because this is rather inefficient, they license the IP to the CME, and then they're left holding this exchange medallion to operate a futures exchange. Some of the initial investors in Eris-Exchange included firms like DRW, CTC, and some other proprietary trading shops. They already had been dabbling in crypto, and some were very successful at that point. And they recognized the same points that I made earlier, that there's this lack of regulation and compliance in the industry. So what they did was they actually first built out a cap table, and they included some big heavyweight proprietary trading firms like Virtu, which is a publicly traded company, Susquehanna, Bitmain, which is a large mining shop, GBTC, Digital Currency Group, which actually is the group that created GBTC, which people buy and sell in their portfolio as an equity, which tracks the price of Bitcoin. And then also NASDAQ, CME, and Cboe made investments. But personally, when I've been involved in the exchange space for 20 years, I recognize how important it is to have a healthy ecosystem of participants in the exchange itself. So I was excited when I heard that Ameritrade, Fidelity, and TradeStation also made investments in Eris-X. Fidelity and TradeStation are both very active on the platform right now, and they're accessing the market. So think about it, by having those participants on the platform and those sophisticated participants as well, it creates an exchange where you're actually, those market makers are offering great prices, price improvement, and good, I call it EQ, execution quality with people's orders. So takes us up to a point where in April 2019, we launched our spot market. A couple months later, we got approved for the DCO from the CFTC, which roughly only about a dozen firms have ever been approved for a DCO. Those include shops like ICE, International Continental Exchange, and even CME. So we get approved for the DCO as a crypto exchange. That takes us up to December of that year, at which point we launched our own proprietary matching engine technology, and we put up our first physically settled futures trade. Over the next year and a half, we went out and pursued all the money transmitter licenses so that we can work with customers throughout the United States, including New York, which is the BIT license that's very difficult to obtain. And then also during that period of time, we launched cash settled futures in addition to physically settled futures. And then we were also the first to list ETH futures, Ethereum futures, which the CME actually piggybacked on our approval from the CFTC. At which point that takes us to, I would say, October of 2021. And that was when the announcement came out that Cboe was going to acquire Eris-X. One of the drivers to that acquisition was the fact that we had a margin application already pending with the CFTC. So they came in and immediately offered. So when you trade futures, you have to have a default fund. What that means is, God forbid, somebody blows up on the exchange, there's a pool of money that protects the other participants of that exchange. Cboe, normally what happens is the clearing firms come in and they fund that. Well, if you're just starting out and you're asking them to put money into this, they're going to think you're crazy and tell you to go walk and come back when you have some volume. Well, Cboe was nice enough that they actually contributed $100 million into that fund to help us get this off the ground. And then I would say about 8 weeks ago, we submitted our new margin application into the CFTC. Now, if you're going to be thinking about the space, you have Coinbase, Kraken, let's say, and Gemini. They're pure spot exchanges. I want to buy Bitcoin for this price. I want to sell Ethereum for that price. If you look at the CME's Bitcoin futures or Backed, which is a group within ICE, they're cash settled futures and physical futures. With Eris-X, we're actually marrying the two of them on the same platform. So there's tremendous capital efficiencies by having futures and spot on the same platform. Plus, you're able to mitigate your risk by hedging between the two of them as well. Let me jump ahead here. So this is the announcement that we had that Cboe is going to be acquiring our market. The coins that I mentioned earlier that are made available on the platform. Now, Eris-X is a central limit order book. It's what we call in the industry as a CLOB, where I touched on before earlier when I said it was a centralized location so that people could come into our data center with their orders, and that matching engine will process those orders. We're available 24/7. So unlike other markets closing between 9:30 and 4, we're available Monday through Sunday, and we rarely go down unless there's a system upgrade, which might happen for a couple of minutes once a month. And then we touched on earlier about the custody and how we have hot, warm, and cold wallets, plus we're also insured as well. So we really pride ourselves on regulation here. So as I touched on the other exchanges before, Coinbase, Kraken, and Gemini, they're supported, or I should say they're regulated by the states. If you look at BACT and CME, they're regulated federally by the CFTC. We're actually regulated by both. So we get audited by the CFTC every year, and we randomly have different states coming in on a rotating basis to actually perform the same function of auditing us as well. And then we're also FinCEN regulated as well. Just highlighting here how we have the DCM and the DCO, and those are both part of the CFTC, FinCEN in the states with our money transmitters that I touched on earlier, and how we maintain surety bonds at each of the states for being able to have access to those states. We have a SOC 2 Type 2 in place, which is an audit. We spent about 6 months preparing for a SOC 2 Type 2. What it really is, it's actually looking at how we're protecting customers and their assets. And we went through a thorough audit that took about 3 to 4 months, and we were able to get approved for a SOC 2 Type 2. Gives that extra level of security, especially when you're dealing with institutions, to know that you've put safeguards in place. As I touched on before with the money transmitter licenses, I just wanted to paint a picture of how that appears and an illustration of we're covered throughout the United States and part of the territories. As crazy as it sounds, Virginia is one of the pending states that we're still working on right now. But outside of that, we have full coverage throughout the United States. Now, we offer participants, especially those that will be using iPlan, different ways to access the market. So once you're approved to be a user on the platform and you've gone through the onboarding process, what's going to happen next is our onboarding team is going to send you a set of credentials to access what we call EMP, which stands for Exchange Member Portal. That portal will have a breakdown of all the coins by asset and how much you have in a notional standpoint per coin. You could query different reports, execution reports, and activity. But also on this screen, there's 2 ways to trade. One is our quick trade widget. So if you said, if a customer came in and said, I don't want to read through a complicated front end, I just want to buy $1,000 of Bitcoin right now, and I want to enter the market. And that's what this is. You'll be able to put in the amount, and you put in $1,000. So you could see in the fine print down below, it will say how much Bitcoin you require for that $1,000. You hit buy, and next thing you know, it's going to show up in your wallet here in the EMP. Now, if you wanted something a little bit more sophisticated, right up here in the right corner, there's a trade button, which will take you to our trader user interface. This is the same window that I was telling you about, the quick trade widget and the EMP, but the mobile version of it. It actually is sized perfectly to your Apple phone, your iPhone, and also Android devices. We haven't developed an app yet, but it's definitely under consideration. This is the full-blown trading UI that I was touching base on, what I mentioned earlier in my presentation. You can actually see this on our website if you went to erisx.com and hit View Exchange. That's real-time market data coming into the system. So the way it's broken out is there's a order entry ticket here off to the left. This is the book of buys and sells and activity of willing participants. You've got charting in the middle, and this is your trade history. So as the orders are executed on the exchange, this is dynamic and it keeps updating as the executions come through. And if you wanted to do some queries on open positions, contracts, and so forth, you'd be able to do that from down below here in the bottom. And you could see the different tabs at the top to be able to get more granular into your orders. Also, we have taken a step further, unlike some of the other exchanges where we give some additional algorithmic functionality. So if somebody wanted to come in and do a pegged order where they want to follow the bid up and down as it moves and potentially come through that limit order that you have, you could put in a peg with an offset. As it says here, it's got an offset of $1. So you'd be able to track with the movement of Bitcoin in the book. Same piece that I was talking about earlier. This is the vision. This is the view that you'd actually have from your phone if you're going to actually use your phone to input orders and access the market for Eris-X. And lastly, just want to highlight some areas where you'd be able to find additional information on Eris-X, which would be through our website, through our Insights page, and through Twitter, which the Insight page is based on Medium. And lastly, this is my contact information if you have any questions.